Hey everyone, welcome to this beginner guide equity and futures trading, the basics from Wall Street. In this episode I want to go over some chart patterns that I play, and I want to start here with topping tail. As you can see on this intraday chart, Tesla was going higher and made this nice tail, and the price closed in the lower 25% range. So if you take a fib retrace, you can see price closed below this red line. So we got a topping tail. Also notice the volume spike right here. So as day trader, you will wait for at least a 50% retrace. This will be around here. In a case you got a big tail like this, I always wait for a 75% retrace. So let's take a fib level. So in this case, you will look for a 172.14 as your entry, and your stop loss will be any close above this tail high, the 172.72. This will be your stop out. So on a topping tail, you are looking for a reversal, and as you can see, we tested the 75%, came back down, price went higher. They tried to break out above this tail high, never closed above this tail high, and you see the big reversal in Tesla. So this is how you can short some stocks, to look for a topping tail signal and look for an entry around the 50% to 75% retrace. Now let's go over a bottoming tail here, and I want to go over to the daily chart. Nice example here on ExxonMobil. So as you can see, price was coming down. ExxonMobil made a very nice bottoming tail. The price closed in the higher 25% range. So we got a sweet tail. The next day we almost got a 50% retrace. And it's the same method as a topping tail. The stop loss will be any close below this tail low. That will be your stop out. And as you can see, price went high. Now I want to go over some bull and bear flags. As you can see on this Exxon chart, this daily chart, price came down. Price went sideways for a few days. Always look for a multi-day sideways action. The angle is almost 90 degrees, so this is a perfect setup for a short. So price came down. We closed below this 20 and 50 moving average. Went sideways on this 200 moving average. And as you can see, price never closed back above this dual moving average. So we know when price is hammering on a support level, it will break. And as you can see, after a multi-day sideways action, I always look for a 5 to 7 days sideways action, and price starts to drop. So this is a bear flag, a perfect setup. Now I want to go over Amazon here. This is a bull flag. So we got this up move, sideways action. We got support of the 20 and the 50 moving average. So they pierced the 20 moving average, went to the 50 two times. And as you can see, we got some nice tails right here. So buyers were holding up the stock. And as you can see, price went higher. These are the perfect setup, guys. So you got your bull flag or your bear flag. And you got some support or resistance. So if we jump back to ExxonMobil here, so here you can see on Amazon, the 20 and the 15 was holding up the stock, and on ExxonMobil, the 20 and the 50 moving average was resistance right here. So your stop loss on a play like this will be very limited. So in this case, your stop loss was here, right around the 89.38, and your entry was around this 50 moving average around 89.16. So you got a 25-cent stop loss. And on Amazon, so you will look around this 20 moving average to pick up your long position. So in this case, your entry will be around 265.50, let's call it. And your stop loss was the close below this 263.28. So your stop loss is very limited. Okay guys, these were the bull and the bear flags. Now let's go over some head and shoulders pattern. Okay guys, now let's go over Google. I want to show you head and shoulders. This is something what I love to play. As you can see, we got this left shoulder, we got the head and the right shoulder. Now where will you take your short position? Any close below the neckline will be your short. So in this case you will short it on this at the end of the trading day, this candle right here, and your stop out will be any close above this neckline. This will be your stop out. So in this case you got a very small stop out from a few cents. So and as you can see, the next day Google start to break lower. Now you also got this inverse head and shoulders. This is a bigger one. As you can see on this apple, left shoulder, head, right shoulder. Price closed above the neckline, and as you can see, a nice bounce into this 200 moving average. Now in this case, price reversed back to the neckline, and as you can see, this was your second long opportunity, and Apple break out to the upside. Okay guys, this was it for part 2. I hope to see you all on part 3, and I see you on the charts.